Hello and welcome to Crypto Weeklies. Today in this video, let's talk about Cardano and its token ADA, conduct machine learning based price forecast, regression based analysis, as well as accumulation strategies for ADA. None of the content is financial advice. Let's get started. ADA over the last key periods has been outside this top 10 cryptos by market cap. Although the difference between the 10th ranked crypto, that which is Toncoin, and ADA's market cap is less than 500 million at this point in time. The price is at around 33 cents, has not moved that much over the last 7 days, but over the last 24 hours has had a drop of about 5%. The market cap around 12 billion. In terms of circulating supply and max supply relationship, the max supply at around 45 billion, out of which 35 billion is in circulation, and in terms of percentages, that would be higher than 70% of max supply in circulation, which again, if you look at the last year, let's look at last year and check between the price versus market cap analysis. This price growth or lack of price growth, you can see at one point in March of 2024, price grew to about 74 cents. Now it's half of that, and let's see if the market cap has shrunk by half as well. Market cap back then was at around 28 billion. Now the market cap is at around 12 billion. So slightly more than half shrinkage. For slightly more than half shrinkage in price, that means price and market cap are growing in hand. That means no major effect of the token dilution on price. And then going to the website and looking at the forecast using machine learning techniques, the trend for Cardano's price action is up. This trend line is this pink line, white line is the weekly average price of ADA since 2017, and the bull case is this line in yellow, and the bear case is line in green. So the machine learning model trained on the price action for ADA since 2017 and using algorithms such as ARIMA, LSTM, and XGBoost has forecasted the base case for ADA between 36 cents and 43 cents. That is, if there are no major moments to the bullish side or bearish side, in that neutral environment, the prices or the trend behind the price action is up. In bull case scenario, likely during the end of year 2024 or early 2025, that one standard deviation or 68% confidence, the prices between 41 cents and about $1.40 is forecasted by the model. If on the other hand we witness a major recession and the prices go back down, the bottom is between 13 cents and about 30 cents. So in terms of the price decline from 33 cents to 13 cents would be slightly above 60% decline. In terms of price appreciation, between 33 cents to about $1.40 would be about 4.5x from the current price action. In terms of the tabular valuations, they are available week by week. How this base case and the 3 standard deviation bull cases and 3 standard deviation bear cases can be read is for this week. That is, let's take next week as an example. The week ending on November 10th, the base case scenario forecasted is 37 cents, so about 4 cents higher than the current price action. If the price action stays between this 30 cents and 37 cents, that would be corresponding to a 1 standard deviation bottom. So that means there is 68% chance that prices don't go below 30 cents and 68% chance that prices don't go above 47 cents. Similarly, there is a 95% chance that the prices don't go above 58 cents and a 95% chance that the prices don't go below 24 cents. So right now we are operating in this 68% confidence interval, that is this likelihood that the prices don't drop more than 30 cents and don't rally more than 47 cents. And as we go further down into the future, you can see that the range for the 1 standard deviation is coming close to $1.40, whereas 1 standard deviation bottom coming at around 13 cents. So that's how you interpret this forecasts. Again, not financial advice. Now looking at ADA from the regression based analysis, one thing is clear with this approach is that what is the relationship between the price and the polynomial regression based model. This model also has pointed that again this is a non-linear model where the relationship between time and price does not have to move in a linear fashion. So during the bear market, the regression based valuation, this pink line, has a downward bias. During the bull market they have an upward bias. Again, in the last bear market starting 2022, the prices had, or the regression function had, a downward bias. Right now, since about 2024, middle of 2024, the prices tend to have a upward bias. Again, this is one of the lagging indicators, but again gives a purpose or serves a purpose to analyze the price action in terms of the what is a theoretically a fair value for ADA right now, coming in at around 49 cents per this analysis, whereas the prices are at around 30 to 33 cents. So that means prices are undervalued by about 15 cents. If that is the prices were to catch up in the bull market, again that 1 standard deviation ceiling and the 1 standard deviation floor holds the key. At this point, the prices, you can see historically speaking, the prices are about 70% of the time are within these bonds. That's why the confidence level is at around 68%. The 68th percentile ceiling ADA did take out back in early March of 2024. Back then, the 1 standard deviation or yellow line ceiling price was at around coming in at around 67 cents. The prices went as high as about 73 cents over here. You can see the high was at around 79 cents at one point in, but at a weekly level, but the weekly close was at around 72 cents. So now that we are in later half of 2024, almost 2 months away from 2025, the 1 standard deviation ceiling price at this point is at around 99 cents, and 1 standard deviation floor is at around 24 cents. So that is the range of most interest. And again, in the bull market, prices have tendency to go above by certain percent point above the 1 standard deviation ceiling. Even in the last bull run, there was a case where during the eventual top that was close to the 2 standard deviation ceiling, and that valuation is coming right now at around $2.02. So that is how one could interpret the likely eventual top. Again, without using much machine learning techniques, but more statistics and regression based analysis. So this is the regression analysis for ADA. Now moving forward to the accumulation strategies and the forecast using these models. The first one is the simple moving average based model, where the relationship between the 20-week simple moving average and price, based on that relationship, the price is color coded with risk levels between 0 and 1. The lower risks color codes are the purple and the blue. The blue color, that is between 0 and 0.2 risk. Everything in that risk levels is considered low risk per the model. Again, right now the prices are slightly in a higher risk band between 0.2 and 0.3 risk, but historically speaking, they are still within some of the decent environment to DCA over a longer period of time. Right now the risk is at around 26%. That means the reward is at around 74%. If we look at some of the peaking scenario per this model, in anything about 37 cent is considered close to zero risk. Prices are below this model. So if we were to look at this model from eventual risk reward based scenarios, the risk reward based topping scenarios above this 0.8 risk is coming in at price between $1.50 and $1.78. So that is one of the ways to forecast what could be a market cycle top for ADA using this SMA based approach. Again, this is one of the conservative ways to interpret what could be a theoretical peak. The regression based approach, or the regression based 2 standard deviation seeding, is at around $2.02, whereas this SMA approach gives price action between $1.50 and $1.78 as eventual peak. In terms of the second model, which is a replica of the regression based analysis, over here you can see there are a lot of similarities between this model which is used for regression analysis and the dollar cost or the DCA model, where the proportional distance and time adjusted distance between this regression line and the price is used to color code the price action based on the risk level between 0 and 1. The lower risk environment again is prevailing right now. The risk is at around 16%, reward at around 84%. So you can see some of the best times to DCA per this model is whenever the price is below this 2 standard deviation peak regression, that is coming in at around $1.32 at this point, and that valuation and the fair value at around 49 cents, similar to the regression based analysis, are some of the key levels to watch. In terms of the market cycle top and interpreting where the price has started to become overheated, above 84 cents is definitely when the color code changed from green to red, and eventually again this model also forecasts a peak between $1.30 and $1.61, quite similar to the SMA model. So again a confluence between $1.50 and $1.78 is established. One model, the regression based model, going slightly higher, deviating to the upside, whereas one model deviating to the downside. The last model to accumulate is consider about accumulation is the time weighted average price model. The prices below this blue line, which is at around 46 cents, are considered per this model at low risk, that is close to zero risk. You can see the risk levels are about close to zero as they can get. And if you have a longer term horizon, DCAing below this blue line eventually works out. Again, this is not financial advice, provided that the asset has a potential to make a new all-time high. ADA has made a new all-time high from 2018 to 2021, one of the fewer assets which are around for more than 2 market cycles. At this point, going in for its 3rd market cycle eventually in 2025. So with this, I would like to summarize everything that we discussed about ADA and then look at the wider crypto market as well. The machine learning based analysis at 1 standard deviation coming in at around $1.40. The peak, that is the regression based 2 standard deviation peak at around $2 again, and the next 2 models forecasted between $1.50 and $1.80. The last model to forecast is between $1.30 and $1.60. So a confluence around this $1.50 to $2 level is evident from this analysis. With the wider market looking at around, so this is the top 10 cryptos by market cap, how they are doing on their risk journey at around 0.64 risk. Again, not quite toppy as May 2021 or November 2021, below this 0.8 risk. One of the best time to DCA back in 2022 and 2023 when the color codes were the shades of blue. Again, this would be crucial for if we witness another bear market, to look at what are some of the decent buys on. Right now they are at around moderate to high risk environment per the rallies of top 10 cryptos by market cap. In terms of the news sentiment, is coming in at around 52. The overall news sentiment, some of the news, most of the news are bullish, some of them are bearish, but overall they are at around 53. And the narratives which are gaining popularity, definitely Cardano is one of the narratives heavily discussed on social media platforms such as YouTube and X. Some of the other being Bitcoin, Solana, Ether. That means and also the US election, and that narrative, those kind of narratives are gaining popularity. So with this, I would like to conclude the video. Hope you enjoyed the content. If you did, please subscribe to the channel, also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.